And you'll see, if you are in that crowd of people that jump on the next thing that's gone to the moon, that they think will go even further towards the moon, you can see why they are in precious metals and why they have lost quite a bit of interest in Bitcoin. Bitcoin's gone nowhere, precious metals have exploded. Now, precious metals are going to continue to be in the spotlight for quite some time. Gold has got a long way to run if what's coming out of the White House is anything to go by. And until that theme changes, gold is going to grind up. And it's going to grind up because of the situation that America is picking a fight with China. And that is such a dominant theme, it will drive precious metals for a very, very long time. And unless a group of people need to build up their crypto to go on the lam, then crypto is not going anywhere in the near future. Bitcoin is at a very delicate place right now. And if it breaks on down, it's going to crash. And with all this trouble going on in around the world, you would have thought Bitcoin would be higher, wouldn't you? But actually, when you think about it, Venezuela, well, that's sorted. And it would appear, if we listen carefully to the White House, that the people in power in Venezuela now are saying, yes, sir, no, sir, and have bent the knee. So Venezuela, all those guys there with crypto, they're not going to have to do a runner with it. So that will not change the balance of supply and demand for crypto at that end. And then, of course, if you look at this blip over the last few days, you can say, well, Iran, it looks like that's over now as well. America didn't intervene. The riots didn't knock down that regime and take over. So now they're sitting back and going, phew, okay, guys, family, you can come back from Paris now. That has removed the upward pressure on Bitcoin from that end. In my model, Bitcoin is for flight, gold is for war. Well, who's going to be running now? The pressure, the entropy, the chaos is now America versus Europe. And no one's going to be running from Europe. And no one's going to be running from the US. So nobody needs to load up on Bitcoin because of that situation. That should create a lull in the Bitcoin price.
Bitcoin thrives on instability that forces people to move wealth quickly across borders. That pressure has eased. Political outcomes in regions once viewed as crypto catalysts have stabilized, removing emergency demand. Capital no longer needs to flee overnight. Under this framework, Bitcoin behaves less like a refuge and more like a dormant trade. The market is no longer pricing chaos, it's pricing normalization. Meanwhile, traditional safe havens are quietly reclaiming relevance. This shift explains why Bitcoin has stalled while other defensive assets continue to attract attention. Without panic, Bitcoin lacks fuel, and without fuel, price discovery turns sideways or lower.
Under my model. Now, obviously, loads of people say, oh, no, Bitcoin's the real money, death of the dollar, blah, 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 blah. All those people, and I know a lot of my viewers will be amongst the death of the dollar, it's the end of the financial system and all that. And, hope you're wrong, could be right. I've got precious metals up to here, so it's not as if we're not, roughly speaking, on the same page. Well, actually, a different page, it's the same book. But the focus now of the get rich quick, oh, I'm going to make millions and billions, it's going to go to the moon, 10x and all that lot. That shifted from crypto into precious metals. Amongst people watching this who are saying, yeah, silver's going to 500 and all that, that is the kind of narrative, if you want to put it, that was in crypto, that was in Bitcoin. Oh, it's going to be 1 million by Christmas. 1 million by Christmas. That is an old joke from the stock market back 25 years ago. Oh, this year it's going to be £1 by Christmas. Some of my viewers will remember that period. Well, now it's going to be 10x by Christmas. And that is pure evidence of when a market has attracted the FOMO crowd. And the FOMO crowd is when you get a bubble. And we're in a bubble in precious metals. Not yet with gold, definitely in silver in my book anyway. And that crowd is now running around in gold and silver doing their thing. Now, I think gold, which is a much heavier asset than silver, there's something like 3 trillion in silver and something like 50 trillion in gold.
Speculative enthusiasm hasn't disappeared, it has migrated. The same emotional energy that once fueled Bitcoin moonshot narratives is now flooding into precious metals, particularly silver. Extreme price predictions, rapid retail inflows, and social media certainty are classic signs of momentum chasing. Gold remains more disciplined, driven largely by institutional and sovereign accumulation. Silver, however, shows clear signs of speculative froth. This rotation mirrors past market cycles. Capital moves where excitement lives. Bitcoin's story has gone quiet while metals dominate headlines. Attention is capital's oxygen, and right now, Bitcoin is starved while metals breathe deeply.
Gold is going up because countries are buying it. Central banks are buying it, but that's really countries are buying it. And the thing that's become apparent to me is a lot of what's going on in metals is stockpiling. Everybody's stockpiling because, as Prime Minister of Canada said yesterday, the castle walls are being built, and inside the castle you have to have stockpiles, and they're stockpiling the metals. And if you put all the metals together that are generally traded, you'll see they're all doing roughly the same thing. And gold and silver and the other precious metals are basically setting the pace. Well, actually this video is about Bitcoin rather than about those metals, and there will be a lot of metal people watching this because it's all about Bitcoin versus gold. Gold is now in the spotlight and Bitcoin is out of the spotlight. So I'm expecting Bitcoin to break on down through the line in this chart. Have a look. See that? And if you look at that chart, you can see that the downside is more than the upside potential in what I would see would be the upside if Bitcoin were to rally. So downside more than upside, risk reward ratio is bearish. This dialogue between gold and Bitcoin, with Bitcoin not in the spotlight and gold in the spotlight, is caused by this. And have a look at this chart.
Gold's strength is not driven by retail excitement. It's driven by governments. Central banks are stockpiling at historic levels, reflecting a shift towards self-reliance in a fragmenting global system. Nations are preparing for supply disruptions, currency weaponization, and geopolitical decoupling. This is not a trade, it's insurance. Across commodities, similar patterns are emerging, but gold sets the tempo. Bitcoin cannot compete with this scale of demand. Gold is being accumulated quietly, steadily, and strategically. As long as sovereign buyers remain active, gold's upward pressure persists, independent of market sentiment or speculative cycles.
And you'll see, if you are in that crowd of people that jump on the next thing that's gone to the moon, that they think will go even further towards the moon, you can see why they are in precious metals and why they have lost quite a bit of interest in Bitcoin. Bitcoin's gone nowhere, precious metals have exploded. Now, precious metals are going to continue to be in the spotlight for quite some time. Gold has got a long way to run if what's coming out of the White House is anything to go by. And until that theme changes, gold is going to grind up. And it's going to grind up because of the situation that America is picking a fight with China. And that is such a dominant theme, it will drive precious metals for a very, very long time. And unless a group of people need to build up their crypto to go on the lam, then crypto is not going anywhere in the near future. In my book anyway, not until the next halvening. Bitcoin, bearish. Gold and all the other precious metals, bullish. Metals in general, bullish. I'm not in crypto. I mean, I've probably got some in a wallet somewhere that I've forgotten about, but I have no material positions in crypto. And I am up to my ears still in precious metals.
While metals benefit from deglobalization, large technology stocks face a different reality. Fortress-style economic policies threaten the assumptions behind massive valuations. If access to foreign markets becomes conditional or unreliable, earnings models fracture. Dependency cuts both ways. Markets priced for seamless globalization are vulnerable to political shock. If those assumptions unwind, capital will seek safety, not growth narratives. Historically, that safety flows into tangible assets. Gold stands to benefit most. Bitcoin may attract niche interest, but institutional capital defaults to what history trusts. In systemic stress, credibility matters more than innovation.
I have rotated out of a lot of silver into the same amount of gold in terms of dollars. So I'm longer gold, less long in silver. I don't think there's anything that's going to hold back platinum and palladium in the medium term. So I'm positioned in that, and military stocks. There is a big danger out there, and I'm going to be talking about this probably later in many other videos, and that what is coming out of the White House is a real danger for the Mag 7. Imagine Google if Google got cut off from Europe, but even the UK for that matter. And how about X? I know X isn't listed, but X could get cut off. All these American technology companies, they make the West, the small countries that Carney talked about, dependent on America. Because what happens if they pull your Microsoft Word, or they pull your Oracle database, all that good stuff? You fall to bits, don't you? And an unreliable American ally, and frankly, Carney said America is not an ally anymore. Well, you can't rely on anything that comes from there, can you? You have to rely on your own. Well, that is potentially catastrophic for companies like Google, Microsoft, all those big guys, even Amazon. I mean, probably not Amazon, but you know what I'm saying. This theme about Fortress America, which is what it amounts to, and, bend the knee, well, that's really, really bad.
Gold is no longer just an asset, it's a signal. Its steady climb reflects underlying stress before headlines confirm it. Bitcoin, by contrast, remains sidelined, lacking urgency or narrative momentum. Until conditions force mass capital flight, crypto remains dormant. Portfolios positioned for fragility, physical metals, mining equities, and defense-linked assets are aligned with the macro environment. This is not optimism, it's preparation. The global system is brittle, and markets are beginning to acknowledge that reality. Watch gold closely. It will likely telegraph what comes next long before the rest of the market reacts.
For the sort of companies that have these massive, massive multiples in their valuations, and if they were to come unglued, well, that would smash the American stock market, and it would be frankly catastrophic. And of course, where are you going to run? You're going to run into precious metals, aren't you? Maybe you run a little bit into crypto, but the mainstream is not going to pile into Bitcoin. They will pile into gold. In the long run, in the far field, the sort of stuff that's going to be coming out in Davos, and we're hours away from Trump speaking, which is going to be historic, that is nothing but positive for precious metals. And I would say pretty negative for the American general stock market, where everything is priced to perfection, and globalization and world trade and basically kumbaya. And if that goes away, those stocks will fall heavily, and they represent a very large chunk of the index. Now, my positioning, and probably a lot of your positioning, is in precious metals, physical metals, mining, and defense stocks. That's where I'm at. Now, I've got a few more sensitive mainstream stocks in there, and I wish I could have more. I wish I could look around and say, yes, I would like to buy sensible stocks. I'd like to buy Disney. I wouldn't, but you know what I mean. But it's too fragile. I mean, tourism, what could possibly go wrong, for example? So we're in a very, very fragile time, and I'm positioned for that fragility, and it's paying fantastically, and I'm sure a lot of viewers here will be very happy with their returns. The overall picture is really bad, but we will see. Gold will probably show us the way. It will be the thermometer of what's coming up next. We'll be keeping our eyes on gold, obviously, and that will tell us the likelihood of things to come before they hit the headlines.